Top tax issues for 2016. 11 things you will want to start thinking about now. About your next tax season. Getting ready for the next tax season. It may seem as though the tax season just ended, but in fact, next tax season is already just around the corner. With that in mind, our California CPA Society put together this list of regulatory and legislative developments, tax issues, and other concerns that you will face early next year. And maybe you can do something about it now. Number 1, Supreme Court ruling on Affordable Care Act. Many people will now continue to have access to affordable health care in the states which did not establish marketplace health care exchanges. It also tees up our next 3 major topics. Number 2, Affordable Care Act changes for individuals. The individual mandate penalty increased to the higher of 2% of yearly household income, or $325 per year, with a maximum penalty per family of $975. In addition, federal poverty level guidelines used to determine this individual quantities for substance have been increased. Number 3, Affordable Care Act provisions impact on business. Applicable large employers who have on an average of 50 or more full-time equivalent employees in the prior calendar year must offer maximum essential coverage that is affordable to their FTE and to their dependents, or be subject to an employer shared responsibility payment. Traditional relief for 2015 exists for ALEs with fewer than 100 full-time employees in 2014, and only requires employers to offer minimum essential coverage to 70% of full-time employees and their dependents in 2015. Number 4, new forms to contend with. 2014's return was 1095-A for reporting insurance coverage and the tax credit. Now we have the Form 1095-B and the Form 1095-C, which were optional for calendar year 2014, must be filled by any person that provides a minimum essential coverage to individuals, 1095-B, and by applicable large employers, 1095-C, who have an average of at least 50 full-time equivalent employees during 2014, or smaller employees who have members of control groups that collectively have at least 50 full-time employees and who offer an insured or self-insured plan or no group health plan at all. We've already seen that on the W-2s of employers where they're reporting the amount of insurance they're paying for an employee. Number 5, increase in identity theft. This is a big thing. For many years we did not know who was the thief. Now, under the new policy announced by IRS, taxpayers may receive a letter when the service stops suspicious tax returns that have indications of involving identity theft, but contain legitimate taxpayer's name and or social security number. The IRS has agreed to reverse its policy on providing identity theft victims with copies of fraudulent tax returns that were filed under their name by scammers, so they can take the proper steps to secure the personal information, because now on there is an address who was using your tax return. Number 6, Despite efforts to get ahead of the schedule, Congress looks likely to put the usual wait until the last minute trick for extending things like Section 179 deduction, R&D credits, and a host of other credits and deductions that expire at the end of 2014. If not extended to cover 2015 before year end, this will make tax planning difficult and result in delays in tax forms and software releases, including times when IRS will start filing. Number 7. Supreme Court rules on same-sex marriage. All states must now recognize all married couples in the same way for the state income tax purposes, regardless of gender. This will impact the ability to file joint income tax returns, the ability to transfer property to each other's tax-free, the ability to leave the estate to the spouse without gift tax implications, and spouse's treatment of inherited IRAs. Number 8. Trade legislation tax changes. The Trade Preference Extended Act of 2015 contained a number of tax proposals in addition to trade measures. Taxpayers who exclude foreign earned income under Code Section 911 cannot claim the child tax credit. Taxpayers must receive a payee statement 1099-T before they can claim the American Opportunity, Hope, and Lifetime Credit for education, Learning Credit, or taking the deduction for qualified tuition and related expenses also. This is effective for tax years beginning after the taxpayer date of enactment. Number 9. Proposed salary thresholds for overtime pay. Under the new rules proposed by Obama administration, the Department of Labor would require most salary workers earning less than $50,000 annually to be paid 1.5% of their normal pay for time worked over 40 hours per week. This is slated to start effective, if passed, on January 1st, 2016, which is only 3 or 4 months away now. Number 10. New filing deadlines. In observance of Emancipation Day on Friday, April the 15th, 2016, taxpayers will have until April the 18th, 2016 to file their 2015 individual and or make their first payment for estimated payments. This gives us, the tax preparer, an extra weekend. I bet I still have Monday extensions as well. Taxpayers in Maine and Massachusetts have until April the 19th, 2016 to file a return so they can observe Patriotics Day on April the 18th. Finally, 11. Tangible property regulations. These regs caused a number of headaches last tax season. Under the final regs, all costs that facilitates the acquisition or production of such property may be capitalized. Improvements to property that better a unit of property, restored or adopted to a new or different use must be capitalized. Exceptions: diminished safe harbor annual election requirement, routine maintenance at safe harbor, and no election required per building safety harbor forms small business annual election required. All right, I hope this is giving you some food for thought for 2015's tax return, and if you plan ahead, you should be able to outguess some of the tax credits and tax income and deductions. Good luck.